What is going on, guys? Happy Friday. It's Meathead Money coming at you here with another video. Got a pretty exciting one for you today. It is going to be on the AQST Therapeutics stock. They did take a bit of a hit today, roughly 21% down. Not the greatest. You guys are interested in this, I want to do a review. Starting, it's like the end of April here, roughly. They're on a pretty decent bullish cycle, trending upwards. And there's a lot of speculation that this could potentially hit in the 4, 6, possibly 9 range. However, as we can see, it did take a dive here today. I don't think it's much of concern. There were earnings calls today, and this fluctuation's always, you know, heightened based around these earning calls. So let's dive into some of the actual information of the company here. So this is the information coming directly from Questive, the company itself. So all this information can also be found online. But this is a good brief kind of overview of what the company does, kind of where they're going, and you guys can make the determination if you think this is a good company or not. But diving into this, so currently they have 5 FDA approved products, and they are over 10 years with product sales across 6 different continents. So that's great. They're not strictly located or just have one kind of market. They are expanding across continents, which is good. They have 200 plus patents worldwide and 23 field patents, which cover AQST 109, which is epinephrine. And this is kind of what they're currently working to get right now. And they have 19 patents covering Libervant, excuse me, Jesus, butchered that. Anyway, so they have 2 potential product lines here. Again, I kind of mentioned this AQST 109, and then they have the epilepsy drug, which is that Libervant, that they recently just got FDA approved. Their trial is up to expire in 2027. So we'll see what happens with that. But currently, that's a positive sign that they're able to get FDA approvals on this stuff. So their main focus right now, they're putting funds into AQST 109. It's really trying to treat this anaphylaxis, which is more or less anaphylactic shock. And most people currently would take like an EpiPen for it. Again, this is kind of the map with some of their current products and where they are globally right now. Again, this just kind of outlines the market here. So right now they've got addressable market of roughly about 1 billion people. So it's a huge customer base, and they're looking to file for an NDA in middle of 2024. Currently, they are in trial phase with AQST, and I do have some reports for that we can go through. But overall, it's been pretty positive. Leadership team. Go back one here. So right now in the United States, roughly 32 people are at risk for this chronic, epileptic episodes. And cost wise, $1 to $2 billion a year is what they're hopefully looking to capture, or at least that is available as a customer base. Again, all positives thus far. And really what they're trying to go against is kind of the, trademarked EpiPen. And their whole name of the game here is that, these EpiPens are bulky, they have needles, and, they hurt. So they're trying to make more convenience out of treating any anaphylactic shock. And what they want to do more or less is be able to administer it orally, similar to like a Listerine strip. And it's really the only product type right now that is out there currently, at least that I'm aware of, in the market where they're trying to do this. So in comparison with EpiPen, with their clinical data, just a high overview here, they are in line, if not beating what the EpiPen can do. And with epilepsy, so this is that other drug that for whatever reason I cannot pronounce right now. Libervant. Oh my God, Libervant. There we go. Libervant. All right, so this is the one that they just got approved, and their trial's expiring in 2027. And right now, again, they have roughly 1 million people that they're trying to treat, or at least the market base with 1 million people, and within 92% of the patients, there is no interaction with historically available treatment. Yeah, let's see what else we got here. Revenues, we'll get into that a little later, but overall, their basis here is they're really trying to focus and dump a lot of money into AQST, so they really don't have any positive cash flow. Pretty typical of a pharmaceutical company, especially early on, where they're trying to market and they're dumping money into research and trying to get these drugs out FDA approved in the market so they can actually start capturing revenue on that. So it's, again, not to be expected that they're going to be rolling in the dough right now. Now, these are the trial results. So some of the key takeaways is that, like I kind of mentioned before, this AQST in comparison to the EpiPen, reaction times, absorption times, where the anaphylactic shock and the episodes are being administered within or beating the EpiPen, and then the same thing with the IM injection. Both on single and double dosing, they are keeping in line or beating their competitors, which is a great sign. And again, keeping in mind that, this is the only company as of right now that can do this orally. So it's more compact, it's more readily available, and it's less quote unquote scary. You don't have to worry about needles or, administering it wrong or over administering it. It's simply you put this in your mouth, on your cheek, on your tongue, you take it, and it, helps prevent the episode. And throughout the course of their trials, they also have been very low to no occurrences with any allergic or any type of symptoms that are alarming. So again, here there's no severe or serious safety as of right now. And again, these results just basically say that they're more aligned with some of their competitors. So that's a great step, especially as they're trying to get FDA approval here. It's probably not going to be this year, like they're shooting for mid 2024. So they're looking good. They seem to be heading that direction. If we go back here, this was based on their earnings call today. Oh, excuse me, wrong one. Well, just since we're on this, so this Libervant, they currently right now, again, this is kind of the breakdown of where I was getting that January 27th. It's also in that last slide, but this FDA drug, 2027 is when it expires. So again, 1 million people are suffering from this epilepsy, and some of these, they can't interact with any other available treatment. So that's a pretty good market. Jumping over now to the earnings call, some of the big takeaways, again, which I'm not sure exactly why the stock dipped today. I think, again, it's more or less people trying to short it just to take advantage of the short-term profits they had. And a lot of people were dumping it because based on the reports, they reduced their debt by over $9 million and they reduced their interest payments by over $1 million a year. So that's awesome. That is them, basically reducing debt, increasing profitability. And let's see here. So again, reducing debt almost 20%, ending the quarter with approximately $27 million in cash. They're looking to get FDA review soon. And there are a couple other things towards the bottom here I wanted to touch on as well. But again, guys, overall, pretty respectable. So we reduced outstanding debt again from 51.5 million on December 31st, 2022 to 42.4 million on March 31st, 2023. So that was a couple months ago. And then through combination of principal prepayments of 5.6 million and scheduled principal amortization of $3.4 million, they were able to bring in 22 million of non-diluted capital, which includes 11.5 related to amend the existing commercial exploitation agreement. So you guys can kind of go through this again. So another big takeaway. So revenue is approximately 42 million. So they went from 42 million to 46 million, which was from 37 million to 41 million of non-GAAP adjusted EBITDA. So again, this is positive, in my opinion, that this company is going in the right direction. They're making good improvements and seeing good progress within their clinical trials. So I don't see a reason why this would be, a bad quote unquote buy at this point. I think, with the dipping, I honestly think it's a good time to, buy into it. I think this stock probably will start rising again within the next couple weeks. And we'll see what happens. I mean, over the past 3 months, we're up 133%. Again, a lot of that was from this rise that occurred back in April into March. And if we look at just go see what the big wigs here have to say about it as far as ratings and what they're targeting this at. So right now they're having an average price target of about $6 with a high of 9.5. Now I have seen some of the market shares right now, and there are a lot of option trading going on with strike prices, at $7 and $9. So that to me says that some of the big wigs out in the market see the stock well exceeding this $6 mark. And you guys can see, I mean, even if it goes up to $9, which is kind of what the high is from the Wall Street average here, I foresee that this could easily see $6, and it will probably not be necessarily in the short term, but if you guys are looking to invest, it's something to consider. Now, I will just say that pharmaceutical companies in and of themselves, it is a risk, and it's high risk, high reward type of deal. So it would just take one bad trial or some small hiccup to set this back, and they kind of not necessarily start over, but it makes the road a little more difficult to actually start getting profits on this. Now it seems pretty positive, and if you guys think that this is something that you guys are willing to invest in, then I say go for it. And there's definitely a lot of upside for it, and it's only $2 a share. So you guys could throw in $500, $1,000. That's quite a bit of shares, and you guys can see some good profit gains from that. If you guys liked it, give me a thumbs up, subscribe. If you got questions, comments, leave them down below, and look forward to giving you guys another video here in the future.